Hey everyone, to stick with us versus herd. If it's your first time here, like the content, hit subscribe. If you haven't yet subscribed to our new options trading live channel, the link is below in the description. And if you haven't yet joined the UVH fam and you want to, our community, links are below in the description as well to our Discord and our options trading group on Facebook. Today was a wild day. Dow closed down over 1,400 points. And the question everyone is asking, is the market on the verge of crashing? And some people say we've crashed already, but in my opinion, of course, this is my opinion only, for entertainment purposes only, that this is just the beginning. We're just in the beginning. Everything has been very orderly. The selling has been orderly. There has not been any flash crashes. There hasn't been any panic, but it's starting to get a little bit more concerning, I would say, in terms of the market. But first, what I want to do is go through a couple of my trades. I closed and realized profit a little bit over 150. I didn't start trading until about noon Central. I was tied up in meetings all morning, so I only made a couple of trades here. S&P futures I made 55 bucks on, which I was down on that position, and then I made $102 realized on Apple. I was trading the 277.50 puts, bought them for 650, sold them for 750, so about $100 in 8 minutes. So it was a quick trade, just looking to get in, get out. And then I'm currently riding the 272.50 put. I bought for 665. Didn't get the best deal on that one. Currently down about 20% on that. So I'm down 140 on Apple's crazy run at the end of the day. So I did buy it. What time did I buy that? I bought that at 207, so a little bit early. So I bought that at the beginning of Power Hour when they were starting to crush it, and then they ripped it up. So only down about 20%. We'll see how it goes. You know, if it gaps up and then fades, or if it rips up, you know, sell it for like a 50% loss and then make the rest back intraday. So have a pretty good plan that, and if this goes against me, if we gap up about 280, you know, we're going to be looking at intraday day trading, trying to get back to even. But essentially what I'm looking at here on Apple is that, like the 303, if you're looking at the weekly high here, we're still in a downtrending channel. And if you zoom in for the last couple of days, still in a downtrend as well. So it really needs to break like the 285, 282 area. And right now I don't think it has basically the momentum to do so. You know, Apple is doing fairly well in the sell-off, but even on the one-year chart, you can see that the highs keep getting lower here. Ever since we came back under 300, the highs keep getting lower, and they haven't been able to make a new high in the last 4 days or so. So 5 days, 6 trading days actually. so in the last 6 trading days, it hasn't made a new high. We're still on the decline here. Yes, you're gonna have green days in a bear market, and you're just gonna have to ride with it. But pay attention to the charts, pay attention to support and resistance, and trade accordingly. Don't risk too much of your account. Don't blow up your account. You know how we do it. We take profits and redeploy the capital. But what I want to get into here, SPY, S&Ps, you know, really what we're looking at here in terms of like a potential market crash. Panic is starting to get in. We made a 52-week low today. SPY hit 270.88. So we had a weekly low, and when we're down in these ranges, people are starting to get a little nervous. You know, when we came down from like 320, 315, people are like, okay, we had a little drop, we can afford it, blah blah blah. Then we came down to 300. People are like, okay, it could level out here, it could bounce, you know. But now that we made a new 52-week low, people are starting to get concerned, and this is where the panic sellers will start to come out. Is if we keep pushing new lows, keep hammering it, sure, we could see some bounce backs up to 290 and that kind of area. But I'm thinking we actually have to go to multi-year now. You know, the next stop that I'll be targeting on SPY is the lower 260. So like 262s, 263, 260 area. So anywhere between 260, 263. If we do get a flash crash or panic mode that people are just selling and the wheels have fallen off, you know, we could potentially go all the way down to 240, 230. I do think it could crash, you know, 30, 40 points quick. And when I talk about flash crash or panic, I mean, that's going to be done in minutes. You know, we can crash in 5 minutes, 2 minutes, 1 minute. So that's what we're going to be looking at. You know, right now, things with the coronavirus are just starting to ramp up. They San Francisco says you can't be out publicly in large masses. In Chicago here, they canceled the St. Patrick's Day. I know University of Michigan, they're not allowing students to go to class. That's not so concerning to me right now. That sounds like pretty good prevention. What I'm more concerned about is the economic outlook, and what does that mean? Right now in Italy suspends mortgage payments amid the outbreak, and this is pretty crazy that they would actually suspend mortgage payments, because this is going to take a big hit. But since Italy is on lockdown, people aren't able to get to work, people aren't able to do what they need to do, and small businesses, families were given time off during the financial crisis before having to repay. So Italy's death toll jumped from 366 to 463 on Monday, and they're suspending debt payments right now. So if that's the case in Italy, I know Italy's a lot smaller country, and economically I'm not saying they don't matter, but they're not as big of an impact as terms of China or the US or some other countries. So what I want to know is how this thing is going to unfold in the US. And right now we're in the very early stages. What we do know is the Fed had an emergency rate cut, 50 basis points, just out of the blue. Bam, that didn't do anything. We know that they stepped up their purchases to 200 billion, and now today they announced that the Fed is going to boost overnight repo lending to 175, so from 150 billion to 175 billion. And next week we're expected on March 18th to get some sort of rate cut. So it's just we're in uncharted territory. Things are crazy. I don't know if, when the warmer weather comes around, that the coronavirus is going to die down, or if it's going to ramp up and people are not going to be able to work, and people aren't able to get out of the country, into the country. Are they going to shut down flights? Today Boeing got slammed, $42 because they said that they're going to, let me try to pull that up here real quick. So Boeing halts hiring, limits overtime as coronavirus poses global economic disruption. And I've said this before, we haven't yet even seen any of the disruption in the reports or anything like that. We're in the very, very early stages, and if they're overreacting is one thing, but once those reports come out and confirm what we're seeing now, we're going to have some really big trouble. Also, the 737 MAX orders have been dropped as well. So, we already knew that, right? So Boeing's going to halt that. They're down entirely 18% in one day, $40. This is at a multi-year low here on Boeing. Last time it was here was back in 2017, 2016 area. This is insane. Also, Disney's took quite a hit too. They're back down at 105. They hit a low of 102, ramped up to 105, and they could be seeing the 100 mark as well. So, this is just getting started, and in the U.S. they're not even that bad yet. I don't even think we have 1,000 cases yet in the U.S. Maybe I'm wrong, but we might. Confirmed cases. We probably have a lot more cases than what they're saying. So right now I'm holding short. The only thing I'm holding short is Apple 272.50 put. I'm also short oil. So I'm short. I have a debit spread right now for April expiration. I have the 32 put, and I'm short the 31.5 put. So right now I'm down $5 on that. But I do think that oil, if we're looking at oil right now, oil tried to make a run last night to 36, and it broke down back to 33. I do think that we're going to see some lows here. I don't think it's filling this gap, and if it does, then my max risk on this oil play is $190. So we'll see how it goes. Right now we have a lot of time on it. It's a debit spread, so I got some time to kill on it, over 30 days on the contract. So I do think that this is going to revisit 30 or possibly sub 30, and that's kind of what I'm shooting for right now on oil. But I do think that we're at the very beginning of whatever is happening, and it's going to be very important for us to be careful trading, be careful just in general with our health. Make sure we take our health seriously. Make sure we're making smart trades, not trying to go all in, and just use proper risk management. If you could do me the favor, you watch this video to the end, hit the like button and comment watch to the end. If you made money today, comment got paid. If you lost money today, comment learned a lesson. As always, stay safe, stay green. It's us versus herd.